Hey everybody, happy Saturday. This is Trendy John from Simpler Trading. We are going to get started with this week's BMA broad market analysis. It is Saturday, so I'm doing this early. If you recall, we are taking a trip down to Clearwater to pick up a boat for my buddy. So I'll be out of the office on Sunday. Now, we do have a holiday this Monday, President's Day. So again, this is coming out early, so should give you an opportunity to go ahead and jot down these levels and be able to take all of this in and have a wonderful week in trading. So it's going to be a short week, which typically are not my favorite type of weeks, but there are some levels. We'll talk about them. But before we get started, I just want to say thank you again. You guys hit the like button last week. We got over 200 and something likes, which is pretty amazing. I mean, usually it comes in somewhere between 80 and 100. So that really lets me know that you guys care and value the information that I give you, and once again, I'm going to ask you to go ahead and just take 5 seconds right now and go ahead and hit the like button. And if you have any sort of feedback or a testimonial here at Simpler Trading with us, then please go ahead and jot that down. Other than that, guys, let's go ahead and get started. So, like I said, this Monday is President's Day, and you can see here that is going to fall on the 17th. So we'll be covering the 18th, 19th, 20th, and the 21st. The first thing that we're going to get started with is going to be our market watch. So, our US economic reports and Fed speakers for this week. And the reason why we use this information is just to understand that this is a catalyst. Most of these are just catalysts that push price to the supply and demand levels that I identify and go over with you here during this broad market analysis. Remember, everyone, news is just a catalyst that pushes price there. No need to sit on your hands when you can identify where the levels are before price gets there. So, again, I am Trendy John, professional supply and demand trader, and my job is to help you find consistency and confidence in the market. Going into this week's major U.S. economic reports and Fed speakers on Monday, of course, again, President's Day. Then we have some, it looks like we have some Fed heads talking, and really that's kind of the theme for this week. That's pretty much what I see. Tuesday, Empire State Manufacturing, Home Builder Confidence, San Francisco Fed President Daily speaks, Fed Vice Chair of Supervision Michael Barr speaks. Wednesday, housing starts, building permits, minutes from the FOMC meeting. It's always the same thing. A lot of traders will say, hey, it's minutes. Don't we already understand this? But for some reason, I agree with you guys, but it still causes some volatility in the market. So just understand that comes in on Wednesday, 2 o'clock Eastern time. And then at the end of the day, Fed Vice Chair Philip Jefferson speaks. Thursday, initial jobless claims starts to get a little bit more interesting. And then again, a lot of just Fed heads speaking. And then on Friday, PMI, and then finishing off the day with a lot of talking. So a 4 day week, lots of talking. It just sounds like to me it could be um, kind of tight action this week. And I'll show you later on, especially on our future charts, towards the end of this broad market analysis, and that's where it all kind of comes together. The next thing I want to go over is going to be the earnings for this week. So why are these important? Well, for me, I trade everything, whether it be, small swing trades, meaning like, a couple days to a couple weeks, intraday trades, futures, but I also have a lot of leap positions on, and a lot of them are doing awesome, kind of like Baba. So we want to understand that, hey, Baba is coming up, and we do have a position. I believe it's up almost at 500%, which is pretty damn impressive considering, we're only in February, but we nailed that trade. And so I just want you to know it is reporting on Thursday. Now, I love trading earnings. And as you guys know, I have a webinar coming up with Melissa on the 26th of February. So make sure you mark your calendars. I'd like to see all of you there. And I'm going to have a robust lineup of education for this year. And Melissa and I both combined will be offering 12 classes. 12 classes, and we pretty much knock them out before the June July timeframe, which really we'll be doing and giving a lot of education. So I love to trade earnings, and some of the names that I am interested in this week would be Baidu. But to be honest with you, that's Tuesday morning. I didn't look at this schedule before Friday, so I am not in this. We did trade Baidu and made money in Baidu. We closed that out, but I do not have a trade on. So, but I am interested in seeing how, how well it does because it could have an impact over here on Baba. Just speaking about Baba really quick, I do not plan to close my position at all. It's absolutely free. You guys know that. So, but I am definitely interested in see how they perform. As we move on, some other names that I like that I'm interested in is Toll Brothers. Moving on over into Wednesday would be Etsy, Carvana, Toast, and other than that, that's all I see on Wednesday. And then Thursday, of course, Walmart, Baba, Rivian, Block. I have XYZ. I have these as a leap trade as well, but I have both sides of that. So I have some hedges for Block, but I'll be interested to see how they report. They've been really stuck. They haven't done a whole lot, to be fair. Wayfair, and then Texas Roadhouse, I'm actually really interested in this. I think, I need to look at the chart first, but I'm bullish on Texas Roadhouse without even looking at the chart. So I might, eat crow here. But I believe that Texas Roadhouse is a great value into today's economy. Their prices are great. They're always packed. I know that doesn't mean that they're going to do well. Again, I'm interested in what the chart looks like going into earnings. And then on Friday, pretty quiet. Let's go ahead and move on. The next thing that we're going to be looking at is going to be the bigger picture on SPY. And as you all know, this really keeps me on the right side of my portfolio because we are identifying structure and everything we want to see on a quarterly basis. That means that every one of these candles represents one quarter. Every week I come in here and I identify levels and I give you the notes and you guys can see I'm very consistent with this, but I also make it very easy. One thing about supply and demand is you cut a lot of the noise. I don't need to, bring up thousands of statistics or any of that type of jazz. I'm just looking at levels and we are staying with the trend based off of my methodology. Overall, the major levels held and now price finds itself above the 88.7 of the all-time high, which for me means we have a 95% probability that we see an all-time high. And from what I see, we just actually did that. And we talked about that all week. Price indeed made an all-time high this past week. The two major levels for this week are the top of the monthly edge, which is going to be 606.75 and 602. And I'll show you that here in a second on Thinkorswim. Above targets are based on fib extensions, and those targets are going to be 614, 618, 624, and 634. Okay, let's go ahead and move this out of the way. I'm going to show you SPY and kind of tell you why I'm looking at those levels. And again, this is Thinkorswim. The other platform I was showing you is TradingView. This is a very beautiful setup. You guys can see that it did indeed get choppy over the last month. A lot of traders are having a hard time. So if you're finding yourself um, having a hard time and you're not with us over at Simpler Trading in the Trendy Room, please reach out. We have a $7 trial for 30 days. 30 days, everyone. So please jump on board. It can't hurt, right? It's a couple cents a day just to hang out with us. Anyways, my major levels, what I'm doing is I am anchoring the coefficients from this pivot high to this pivot low. You'll notice that we are holding the bullish channel, which we teach here, the 23 through the 38. It held the 9 EMA. We got above that major level, and as long as we stay above that major level, which again comes in around that 606.75, and then I'm using this level here at the 23.6, which is 602 and some change. Basically, these are going to be your near support levels. So as long as we stay above those, stay bullish. And then we're looking for this fib extension 614, 618, and so forth. Overall, looks really healthy, looks good after consolidation pattern, and could break out here going into next week. Okay, so that is SPY. Now we're going to come back over to TradingView and let's go ahead and take a look at the Qs. And you guys will notice here as well, very bullish chart, looks amazing, definitely looks extended on the quarterly, but let's get to the notes really quick. Just like the SPY, the Qs are above the 88.7 of the all-time high, but price did not make an all-time high yet. So that sounds a little confusing, right? So I want to take you to a whiteboard really quick. All I'm saying is we had some candles here, price broke down, okay? And then it started to move back up, kind of looks like this, went a little choppy, and then we're about right here. So I'm anchoring Fibonacci's from here, all right, and to the lows, and we're over the 88.7, okay? And once we get over 88.7, I have found that 95% of the time we break out to an all-time high. Very important though. That all-time high could be 1 penny above the all-time high, and then we could see a big rejection. So I'm not promising big moves above this. It's just a 95% that I'm looking for that new all-time high, just like SPY did last week. Okay. So the two major levels for this week are the future monthly edge, and I'll go over that here in a second, which is 535.5, and the 23.6, which happens to be 529.80. Targets to the upside are fib extensions 548, 554, 559, and 573. All right, let's go ahead and see what those look like over here on Thinkorswim. And again, guys, if you wouldn't mind, please take a second and just give us a like on this video so I can continue to provide these videos for you every weekend. Notice here the levels that I'm showing you when I say future monthly edge. If you're in the room, you know what that means. It's right here. That's around that 535.5, and then I'm using this 23.6, which happens to be around the 529.80. Just like on the SPY, this is going to be your close support, and this is going to be your overall support for the week at 529. I wouldn't expect prices to break down below that. So really, at the end of the day, I'm looking for a range anywhere from 529 all the way up into the 548 level. So pretty wide, but again, I think that should be just fine going into this week. Okay. So again, overall bullish on the SPY and the QQQ. Let's now go over to our next chart, which is going to be the dollar. Now, the dollar, I want to just talk about some new notes really quick. In the trading view, we just simply type in DXY, and that's going to be the dollar. We're not going to look at a quarterly, but since we're here, notice that it is inside, so I expect it to be overall just pretty choppy. All right, going into the next couple weeks. Now, I like to look at a weekly chart, and I made some notes here that I want to share with you guys. Price rejected the supply zone, that would be this red zone here, and has now pushed further into the demand zone. Okay, notice that when price rejected the supply zone, that the SPY moved up, and when demand pushed the dollar up during these times right here, that overall the SPY QQQ kind of stalled and or went sideways to down. The dollar is correlated to the market. Here's the disclaimer: when you know how to use supply and demand. This week, caution around 106.3 as we could see a spike. However, if we continue down, look for the new all-time high in the SPY and the Qs. The DIA, and I just bring this up, I usually don't bring that up. The DIA, the diamonds, or the Dow Jones, needs to hold 442 and needs to close above 447 for that 95% chance of seeing an all-time high. Okay. So let me take this off. I threw some Fibonacci's on here just to go over the dollar real quick. This is the level I'm telling you, like we could see a bounce from here, and that is the 38.2 of this rally that I've measured. So basically I went from here to here, and that's how I got these coefficients, and I'm just applying that trendy methodology. Now, when you take that off, you'll be able to see that we did come to the demand zone. And when I was talking about these areas, the response off the demand zone, you would note that if you went over to the SPY or the QQQ, we actually pulled down to sideways during those times. And then as the dollar started to sink, after it hit supply, we really rallied in the market. So once again, I've been doing this for a very long time, and I will tell you that the dollar is correlated to the overall market from a supply and demand perspective. Let's go ahead and move on into the TNX, which is the 10-year treasury. And this is important because, when it gets a little jiggy and starts to move to the upside, things get really weird. There's a little bit of caution in the market. I want to read you my notes. The zones are working well. So I'm neutral for now. Basically, we're just caught between two opposing zones. We're fluctuating in here, which really has given us the overall choppiness in the market combined with the dollar and the fact that we came up to highs and we just consolidating a big move. All right. You just got to understand and know what to do on your portfolio or in your portfolio. Technically, I'm going to say this again. I keep saying this and I could be wrong. I see the move going towards 3.8 and below into June and July. For now, there's caution is warranted. Overall market if we see above 5.005. But I like the fact that we're, responding to the supply zone here. We have this big top and wick, which could mean, we're signaling for a little bit lower. Okay. Again, I'm looking at June and July. Still a lot of time before then since it's only February. Next thing I want to go over is going to be the skew. All right, and as I've said before, I'll read this to you really quick. This is just an indicator developed by the Chicago board that measures perceived tail risk in the S&P 500. Tail risk refers to the risk of extreme market movements, either positive or negative. Use in trading, traders might use the skew index to adjust their portfolios. I know I do but combined with everything that I'm showing you. Okay, if the skew is high, one might consider buying protective options. Basically, that's why it says protective risk off. Now, we're living in a different environment for the last year and a half, almost 2 years. We've been staying in this zone, which, history, that's not how things have always been. Matter of fact, it's always been sort of the same way. Right in here was that risk off, and down here is where we wanted to be risk on. And now we're staying up here, which is much higher, which really what it feels like every week is that you're walking in and you're walking on eggshells. You know what I'm saying? So just understand that's the product of the environment that we're living in. And we are very high, 167.97. And typically when we get in this area, it is a protect risk off. So going back to what I was just saying with the dollar is at that crucial level. It's very close, and we could see a pop, which would make sense for the skew, right? Telling you, hey, maybe, a yellow red flag here. But the next thing I want to say is that the reason why this makes it hard in this environment is that you're not getting the sell off that a lot of traders are looking for. You're getting small sell offs in the SPY and the Qs, and then we're finding buyers. It's a very resilient, bullish market. So you're just not getting the things that we used to see, which were down here where there was extreme fear involved. And one other thing that's in the distance is Nvidia earnings. And I keep thinking about that, plus all the political stuff that you're seeing. So again, we're just living up here in the what I would consider the nosebleed section and walking on eggshells. So again, just a reference I like to say with being cautious, but understanding we're staying bullish. It's still fun. Just know that the pullbacks are not as big as a lot of people are looking for. All right. Now, again, guys, overall, remember while the skew is a useful tool for gauging market sentiment and potential risk, it's just one of many indicators that I'm using and should not be used in isolation for making trading decisions. Okay. That leads us to our fear and greed index, which is, lined up to, it was 39 last week. So basically, people are getting more bullish and we're almost to the neutral section. This also is very good information. It's free. You can come out here and read about it. I think they even have a video that you can watch on the site to kind of tell you how they're getting these numbers. All right. So again, it's just saying that participants are feeling a little bit better and they're getting more back to the neutral. Okay. Futures, this is where, for me, I'm a futures trader, I'm an options trader, equity trader, I do it all. And my favorite thing about the futures is it really does show me the future. When we plan these and look at them very nicely, we can put everything together and give you this really good overall analysis for the week. When I come into the ES futures chart, this is what it looks like on the weekly. I apologize for all the levels, but it's just basically what I'm doing is identifying this range here to this range. And these are the coefficients, which are your Fibonacci's. You can see that we're staying above the bullish channel. It's worked very, very well. We're staying above the cloud. Last week, I said that we closed above the cloud, and therefore it was still bullish, even though we had that big pullback 2 Fridays ago. Now we find ourselves still in a supply zone. Now, what's interesting is if you look at the SPY, right? Then we made an all-time high. If you look at the ES futures, we're not quite there yet. All right. So far as the ES futures are concerned, for me, as long as we stay above the proximal level of the supply zone, which is 60.98, stay risk on. If we break down below that, be careful. And then here, I would like to see 60.35 hold for the rest of February, to be honest with you. Fib extensions to the upside, 62.32 by 6331. And that's what we got for right now. Just be careful though, as again, you want to, for me, I want to stay risk on above this level, but I'm also risk on with caution. Let's go ahead and move to the next time frame, which is the daily. Last week's worked really, really well. We came into our buy trigger. It worked very well. And then this week, couple new levels. So just take the time to pause this. Throw these on the chart if you like them. If not, no big deal. My resistance is going to be 61.63. Short trigger, we don't necessarily go short or long just because the levels say that. We go to a smaller time frame and then we look for small signals, okay, to let us know to get long or short. Anyways, we are in a supply zone, just like I said on the last one. And then over here on the 4 hour, this is the big thing about the 4 hours. You'll see this on the NASDAQ because we have two opposing zones that are so close to each other. This makes me feel like it could be choppy with all the talking heads this week and no really big earnings scheduled. I mean, there's some great earnings coming up, don't get me wrong, but there's not like this big over like Nvidia, which I think is not until the 26th, I believe. Okay. Anyways, that's what we have for the 4 hour. And if for some reason we break through that supply, again, we have the Fibonacci extensions to the upside. Let's go ahead and go over to the NASDAQ really quick. And after that, we'll be looking at Bitcoin. So on the NASDAQ, as you can guess, looks really healthy. Big thing here is 21,892 by 21,620. That's my support for this week. And if it were to come in here, I definitely would be looking at buying. Risk on as long as we stay above that 21,800. Let's just call it 21,890. And again, almost to the level we need to see 22,260. If we can get above there, should break out to an all-time high. Going into a smaller time frame, this is what it looks like. We have some new triggers. This is where you want to pause your video. Take these levels down if you like them. If not, that's okay too. Resistance coming in at around 22,287. Short trigger up here towards 22,447. And again, we use smaller time frames and look for different indicators that allow us to get long or short. Just like the ES futures, we have two opposing zones that are very close to each other. Makes me feel like this week coming in could be really like, because it's a short week, could be choppy, not a lot going on, and kind of just gearing up for those bigger earnings that are for the next week. Okay, let's go ahead and take a look at Bitcoin futures when I end there. On the monthly, this is my only focus right here. Beautiful pattern or structure that we have. It's an inside and up formation. I got the buy trigger. And as I said before, this is your biggest level. If we can get a monthly close over 100,001, and I know we don't have to be a D for a T, but it is broken down into, very specific numbers. But if we can get above that and close above there by the end of February, things look really good for a new all-time high. If for some reason we do break down, this is where I'm looking to buy in this green zone. That sums up my broad market analysis, folks. Please give us a like. Don't forget to check out our $7 trial for 30 days. I really appreciate you. Have an amazing weekend. We'll see you on Tuesday.